Hey everyone, today I'm going to break down how Bitcoin is influenced by interest rate and money supply from an economic perspective. We will see how central bank moves, like raising or lowering interest rates, and how changes in the money supply can affect Bitcoin prices. The goal is to explain these concepts clearly with simple visuals. By the end, you'll understand how monetary tightening or loosening, inflation concerns, and Bitcoin's 21 million supply cap all play into whether Bitcoin behaves like a speculative asset or a stored value. Well, let's talk about interest rates. Interest rates are basically the cost of borrowing and is set by the central bank through open market operation. When interest rates rise, it usually means that central bank reduces the money supply in the market, which is known as monetary tightening. With the decrease in money supply, there will be less money floating in the market, and then the supply of loans will also reduce. It will lead to the price of borrowing becoming more expensive, so individuals and businesses will have fewer funds to invest. On the flip side, when interest rate falls, it usually means that there's an increase in the money supply, which is known as monetary loosening. Borrowing is going to be cheaper and there's more money floating around. Investors often get into a risk-on mindset, meaning that they're willing to take on risks in search of higher returns. But why does interest rate matter for Bitcoin? When the interest rate goes up, individuals will have less incentive to invest in riskier assets like Bitcoin, and instead they will invest in safer investment like bonds. On the other hand, when the interest rate goes down, people will tend to have more funds available, and the demand for riskier assets will also increase, so it means that there will be more funds floating into Bitcoin. When the money supply is expanding rapidly, people also worry that each dollar will be worth less in the future, which is also known as inflation. In such times, many investors look for assets like gold that can be debased by money printing, and Bitcoin is also one of those assets that gets attention as an inflation hedge. Well, let's look at some historical data. During the COVID pandemic in 2020, central bank printed trillions of new dollars that led to the interest rate almost become zero. Then we can see that the Bitcoin price skyrocketed since investors were buying Bitcoin as a shield against potential inflation and currency debasement. But what makes Bitcoin valuable? One key thing about Bitcoin is that its supply is fixed. There will only ever be 21 million coins in existence. This built-in scarcity is a fundamental economic feature, because no central authority can print more Bitcoin. Many proponents argue that Bitcoin is a stored value, similar to digital gold. In theory, Bitcoin's fixed supply makes it a good hedge against inflation, unlike fake currency which central banks can expand infinitely. However, Bitcoin is a stored value, but at the same time is also a speculative asset. On one hand, long-term holders treat it like saving assets, trusting its scarcity will pay off in the long run. On the other hand, Bitcoin's prices has been extremely volatile, and it often moves along with the stock market. In times of market stress, Bitcoin has sometimes fallen sharply. Investor runs to safety. Clear example was 2022. Inflation was soaring, but because the central bank increases the interest rate aggressively, Bitcoin price plummeted alongside with the stock market. This shows that, at least in short term, Bitcoin traded more like a speculative asset than a safe haven. Well, thank you for watching. Hopefully you can learn something from this video. If you like this video, make sure to like, comment, and subscribe. I will see you next time. Bye.